What's going on, everyone, and welcome to Numbers Therapy. So a bit of background. We created Numbers Therapy originally to talk through the macro and bring on and showcase our experts in Metaverse HQ. And more specifically, so everyone can understand how all the big pieces fit together to make better decisions with NFTs and other investments using a balanced perspective, to learn about or from some of our people in the community, and to learn about different areas and opportunities out there, including different ways of thinking. More on Metaverse HQ, which we call MVHQ. MVHQ is the top Web3 trading and networking community, and we showcase traders, analysts, builders, and a variety of other rising experts in the space. GM, everyone, and welcome to Numbers Therapy, episode 41. Today's episode, a little bit more rational, titled Macro Roundtable 1 of 7. Why is it called Macro Roundtable 1 of 7? Well, we are implementing a macro roundtable as part of the series of Numbers Therapy. It is intended to happen every 6 weeks. And so we're going to have 7 of them over the course of the year. And there you are. So it's super clean. It's super simple. Purpose of Numbers Therapy, as everyone knows, is to talk through the macroeconomic, operational, financial, technical, trading-based, other dimensions of Web3, putting the pieces together to help everyone understand the latest picture and continue to elevate while also hearing some incredible backstories and having some good laughs along the way. For anyone who's listening live, of course, please make sure you ask questions if you have any, even if they're more intro, even if it's a definition of a word or an acronym. Somebody else probably has the same question. And if it's more intermediate or advanced, please be sure to ask that as well. We have, of course, chat for questions. Please drop it in there and I'll make sure it's answered along the way. Numbers Therapy, as we know, is rated NFA, as in none of what you hear in here is financial advice. So, without further ado, and onto today's guests, multiple, and episode. As you all know, we at Numbers Therapy and MVHQ seek to evolve and continuously up the value of what we offer. As a result, today you're in for a new treat and an episode type that will be running approximately every 6 weeks. As you probably know, all of our episodes talk to the macro situation and current state from a variety of vantage points. However, we wanted to add another layer to the macro and pull up fully every 6 weeks to assess the current state of the overall markets, risk markets, NFTs, and beyond, and piece together where we think the markets are heading in the near and midterm. So with that said, please welcome 3 guests for today's show, all of whom you probably know already. Our first guest in Corner 1 comes from more of the fixed income world and melds that more traditional investment profile with NFT investing and trading. Our second guest in Corner 2 comes from more of the tech and entrepreneurial side of things and uses that to inform his NFT and crypto investing and trading. And our third guest in Corner 3 comes from more of the economics side of things, including both rational and behavioral economics. And I guess I will be in Corner 4, both guiding the conversation, of course, and giving my old melded perspective whenever possible. And so, without further ado, please, everyone, welcome our guests for today's show, Shaggy, Easus, and Laser. How are you guys doing today?
Good.
I'm good, my man.
Awesome. Okay. So let's start at the top. I'm going to ask this each time, predominantly because, some of our listeners don't necessarily know your background, but can you each maybe talk to, what your background was, plus how you landed in the Web3 and NFT world? Maybe we'll start with you first, Shaggy, and then move over to Easus.
Sure, yeah, real quickly. Background is more on the traditional finance side, specifically investment strategy, fixed income strategy. Been doing it for a very long time. Really got involved in Web3 primarily because I was interested in this new technology, the blockchain, trying to figure out what it was and what I could do with it. And after trying kind of Bitcoin and Ethereum, just being able to buy something with Ethereum and kind of collect, and it just kind of resonated with me. So, it's kind of the path I took. It's kind of turned into more of a hobby than I would have expected.
Yeah, profitable hobby. It's a good hobby to have. So, Easus, what about you?
Yeah, so traditionally I came from kind of the corporate world, corporate finance, tech. My last role there was I led an analytics team that was primarily focused on like optimization, like embedded analytics, and some finance stuff as well. And I found Web3 kind of through the sneaker resale world back in 2017 when I was in business school. I also kind of started my sneaker, and then ended up becoming resale business. And originally I found this tech there, and it's just people were just making insane profits. So I said, let me dive in. Read a bunch of articles, but all of it was kind of vaporware at the time. Most of it, at least, except Bitcoin. And resurfaced in 2020, kind of after DeFi summer, going into the Top Shot era, and yeah, I've been here ever since.
Awesome. Awesome background. Laser, over to you.
Yep. So in college, got a BS in business economics. I spent about 5 years as a software engineer, and then pretty much ever since then, just been probably the past year and a half, just been asset trading, pretty much full time. How I got into Web3 was right around COVID. I kind of became like hyper aware of the financial markets, and I really started to give Bitcoin a chance and diving into that, bought some Bitcoin, and it just kind of threw me down this rabbit hole of crypto, Web3, NFTs. So started messing around with stuff on Ethereum, bought my first NFT in June of 21, and yeah, we all know how that goes. So still here and still going along.
It feels really long ago at this point, by the way, June of 21, for whatever it's worth. Now that you say it and I look at the date, it feels like a long time ago, funny enough. But that's excellent background. And for anyone who's listening, right, I think what's going to be so cool about this episode is, myself included, everyone on here is going to have varying opinions at the end of the day. So there's going to be some really interesting, I call it Venn diagram overlap, of where people do agree and where they totally don't agree. And so I'm super interested to see maybe how that pans out, like everyone else is as well. So let's maybe start with just kind of the perspective and vantage point over, on NFTs and Web3 over the past 2 or 3 years, let's say. So Laser, let's maybe start with you. Looking back up to the current date at this point, how do you view the last, call it 2+ years in terms of Web3 and kind of where we started and where we progressed to and kind of where we find ourselves now?
Yeah, I think obviously with any new technology, it kind of brings about a lot of hype and speculation, and that's kind of been, how crypto has advanced so far throughout its time anyway. So seen a lot of attention being driven to that the past 2 years. Obviously, as of late, we've kind of seen it fizzle out a little bit just because of the economy as a whole. But I think, the technology is definitely here to stay. I think there's a lot of good things being built with NFTs, things like ticketing and video game assets and house deeds, things like that. I see a lot of positives for the future, I think like when NFTs become more mainstream, we won't so much identify and talk about them as NFTs. We'll just kind of use them like we use all the different tools and subscriptions and things we use today. So, yep.
So the joke for anybody listening is, when I was talking to Laser earlier, I asked him the question of what's the opposite word of hopium. So if there's hopium on one end of the spectrum, what's the opposite end of the spectrum called? To which he said, hold on one second. He said, hopelessnessium is what he said as the opposite word. So obviously we're going to get some balance on all sides, but obviously there's definitely the rational applications that exist. Easus, over to you. I mean, how do you see the past 2-3 years? Do you see it similar to how Laser sees it, where it was kind of that evolution and now it's heading towards pure rational, and more rational use cases? How do you view it?
Yeah, I think I agree. A lot of people, one of the guys that I talk to frequently, a lot of people kind of compare this to the .com bubble. A lot of people here might have been too young to remember that. My original degree that I wanted to go to school for was e-commerce. That was back in '99. And then the .com bubble happened, and my professor's like, what is this that you're trying to do? And of course, now we know e-commerce is behind everything, right? So I look at it like all of the all of the hopium, all of the potential that we all signed up for and naturally, the price action that happened that came along with that, as kind of, we kind of know what the limitations of the current iteration is, and now we're going through the growing pains of how do we kind of make a sustainable business here. I think the thing that I'm looking for, if you were to ask me, like my outlook, is like, I think what we're trying to do here is we're trying to do something that introduces technology and like a behavioral change, like a change in like the ecosystem of how companies and consumers kind of work. And that's something where like we have to figure out a way to be more economical on all sides for this to really make that next jump. And I'm curious to see how that's going to play out over the next 2 to 3 to 5 years.
Yeah, I mean that's a really good way to frame it. Of course, with the consumer and behavioral changes. Definitely not an easy change or set of changes there. It definitely makes sense. Shaggy, what are your thoughts about this combination of both? Other thoughts outside? How do you view the last 2 to 3 years and kind of where we find ourselves right now?
Yeah, well, I started around July of 21, and the first 6 months, but the first year was absolutely insane. It was completely irrational, but so much fun. Things are, of course, a little bit different state now, but I do think it's super early. I'm not even sure we're to the .com bubble. I just don't think that many people are using NFTs yet. I do think it will iterate many different times before we get to a kind of a more mature state down the road. But I think kind of your typical, PFP projects, etc. I'm not sure. I'm pretty sure those I don't feel like the end state to me. But there's some cool stuff going on for sure.
Yeah, that makes sense. I feel like everyone's kind of aware of that like some percentage of not just PFPs but like collectibles and kind of that direction. A good portion of them will probably not exist into the future, but a good portion of them might still. And what is interesting as you frame it like that to me, Shaggy, is that like since we are so early in the adoption curve, there is for the ones that do stay, there's such a finite supply that winds up existing, right? So everyone's so focused on trades and being able to flip and all that, understandably, right? But if we look at the fact that we're just still so early in the scheme of the adoption curve, that whatever assets do wind up remaining are actually going to be worth a lot, probably at some point, assuming the technology holds. So that all makes total sense. So let's maybe segue off of that, Shaggy, and talk about the current state of the economy, the world, and how that connects to risk markets as well. So where do you think we're at right now in the macro? And if you can kind of bridge the gap in terms of how that connects to risk markets as well and consequently NFTs.
Yeah, sure. Well, we're very late in the economic cycle. I don't think we're in a recession yet, but one is assuredly coming. Every indicator I watch would suggest that a recession is on the doorstep. And now the timing is very difficult. It could be as early as May. It could be as late as next year. It's very difficult to say because a lot of events come along, like the current bank crisis. That could have easily tumbled us into a recession very quickly. But of course, we know the Fed stepped in, provided liquidity to markets, provided a cushion there. So again, continues to prop up markets in the meantime. So again, I could run down the indicators. Some of my favorite are the yield curve, which remains inverted. That is a good sign of more difficult economic conditions ahead. You look at, across the board, most of the economic indicators are weakening. It's just a matter of how quickly we're going to get there. The one thing that kind of keeps holding us up, not letting us get to that recession, which again I think is needed to bring inflation down, is the employment picture. The companies are just too reluctant to let go of employees. The job market is still strong enough. People feel confident in their jobs, so they feel confident in spending. So until we start to see that roll over, start to see company earnings roll over, I don't think we'll see the markets capitulate, get into that recession. But one I'm certain is coming.
With that whole comment about the job market, way too many thoughts there to be able to layer on top of this. Laser and I have had many conversations about this over time, and especially recently. So a whole lot of thoughts as it relates to that. But I just want to make sure we tie up one item before we go over to you, Easus, which is Shaggy. Just for the sake of of connecting the dot for folks less familiar. Like, what does that mean that there's a recession? What is that actually going to feel like for people at the end of the day? Can you kind of connect the dot in terms of what that means and what people should expect from what is like?
Yeah, I mean, so I think it's different whether you're talking about markets or whether you're talking kind of about kind of your day-to-day life. Markets tend to react in front of the actual economy. I would expect markets to bottom sometime early in a recession, and then we should start be able to build out of it even during the recession, as the Fed likely starts lowering rates, does all sorts of things that kind of help the economy kind of back out of the slowdown. But in terms of kind of what it feels like day to day, well, it doesn't feel very good if you're one of the people losing a job. If you're worried about losing a job, you might not be spending as much. Just in general, every recession's a little different, but it's just a feeling, and people tend to just cut back on spending. They don't go out and buy big ticket items. They don't go out and spend as much. Maybe don't take that vacation they were going to take, just because there's a lot more uncertainty about their kind of personal economic situation.
Yeah, that makes sense. And I guess the one mini layer that I just put on top of that, right, which is when people are not spending in general, right, that means that they're not spending in things that could possibly be the service you're providing or something your business provides, and so on and so forth, right? So there's a little bit of ripple that naturally comes from that. But Easus, over to you in terms of layering on top. Where do you think we're at right now in state of the macro, how that connects to risk assets, to NFTs? What's your perspective?
Yeah, I think Shaggy is spot on. Definitely been risk off for a while. I think these kind of price movements, erratic price movements on various kind of shifts and narratives and stuff like that. When you kind of zoom out, we've just kind of been channeling in that same range for a while now. And we're just waiting for the shoe to drop. And you start to hear things like, and I'm going to touch on the employment thing in a bit, because I think I think a lot of these indicators, I got to dig a little bit deeper into to feel comfortable. But it feels to me like when I talk to people, like my I would say my circle, a lot of them are losing like high paying jobs, and I'm still not seeing you're hearing that the Amazons laying off, you're hearing the tech companies laying off, and if I look at like the distribution of income. It seems like we're replacing lower income wages with higher income wages. I don't know if I see the wage retraction yet, but the unemployment number isn't going down doesn't necessarily mean that the economy isn't softening, right? And so what I'm really looking for is like those mid-tier companies to start really resizing and cutting back, and we're just kind of seeing the companies most affected by the actions that the Fed is taking take action early, which is tech. Right, and those just happen to be some of the higher paying jobs. And banking has been in the dumpster for a while as well. So when I start looking at the mix of income and where things are going versus where things are not, like it kind of feels like we're already there. And naturally, those are the people that would spend things on speculative assets, right? They would spend money on speculative assets. They're the people that would come in and buy, kind of come in and buy some of these risk-on assets that we in NFTs and crypto are involved in. So yeah.
Yeah, that makes total sense. Laser, that's a total meatball or softball over to you right now. Curious to hear what your thoughts are on this, because you and I have talked about this at least a couple times, and it's evolved a little bit too. What are your latest thoughts about the macro, about risk assets? Equally, if you want to talk about the job market, any of those things.
I can't really add too much more. I think both of you guys laid that out perfectly. I mean, we're in a risk-off environment, and that discourages spending and investing. So NFTs and all risk assets are going to suffer. But yeah, like you said, you and I have talked about this for a long time. But yeah, in my opinion, unemployment is still too low and prices are too high. Like Easus was saying, I think we're starting to see some of the layoffs, but I think that's it's been mostly tech companies, which were so overextended in the first place. So like Easus said, until we start seeing more layoffs from mid-tier companies or, other sectors. I still think we're just not going to get inflation to where we need to get it. But yeah, I mean, I can't add too much more. Those were great points.
So I'll offer my one little mini layer on top of this, which is, and I totally agree with everything you guys are saying. My one little mini layer that I'm going to throw on top of this is that definitely on the kind of tech side of things, those jobs, I'm seeing the same things that you guys are kind of talking about. There's the other side also, though, right? Which is the blue collar side of things, where there's still, there's still opportunity, and possibly because of inflation and other issues like that. We've already seen automation coming in, right? The rise of AI that's happening, but the automation that's not been talked about is more of like the labor-based automation, right? And robots, automated locations that you go to, things like that. And with inflation being a thing and people having less disposable dollars to be able to spend, I just wonder if there's a forced accelerated pathway to automation on the blue collar side of things as well, that further magnifies a situation like this. Anybody agree with that? Have a thought, disagree, have data to suggest otherwise?
I mean, I just don't think there's enough blue collar workers. I'm not too worried about the automation. I mean, every store I'm in now has, the automatic checkouts, everything else, yet they still don't have enough people to work to do the other things that need to be done. I mean, you still try getting a plumber, an electrician out to your house to do something. It's not that easy.
Yeah, that's a go ahead.
And I was gonna, I was more concerned with some of the white and gray collar jobs. I just think that AI. I think that AI is a lot harder for companies. There's some low-hanging fruit, but I think this iteration of AI is a lot harder for companies to kind of institutionalize, like and implement, than a lot of people make it out to be. And I think that there's still some work that needs to be done with just all of the integration aspects for them to really take advantage of it and feel comfortable laying people off. The funny thing that I think the thing, like when I talk to people, that's interesting is the whiplash that happened from, like, if you were to rewind even as much as 6 months ago, it was like you couldn't find a person to hire, right? And so, a lot of this is like, hey, I just got these people. I don't know if you're gonna whiplash me again and tell me I need them again. And like people are slow to let those. They haven't even. I don't know. I can't remember the numbers, but it takes a certain amount of time for employees that you hire to become productive. And a lot of these employees that they hired, that they scaled up, they just aren't there yet. So I think that we're going to feel that in a little bit further down the road, but that's going to be another headwind to get over once we get over this hump, and we start to get back into like greener pastures in the next, like, in the months or years to come.
Well, while we're on the jobs and tools and tech side of things, before we kind of move on, there's one other like interesting question that strikes me to some extent, which is, like a little bit, I think we saw in like 2008 when that recession happened, maybe a little bit more now, given the further rise of tech. In cases like this, like you're just talking about, Easus, right? When people come in and there's a lack of trust that exists from millennials, from Gen Z, right? And they're like, well, this place isn't going to take care of me anyway, right? So I have to preempt. It's the risk reward isn't there in general, like what I'm getting paid given the risk of getting laid off, whatever. In addition to the fact that there's a huge rise of tech that exists, of AI, no code, different opportunities that exist. Do you think, like, if we look out 2, 3 years, 4 years, we're going to see more small and medium-sized companies compared to more to big companies like we've maybe had the last 5 or 10 years?
If you want me to take that, this is actually what makes me excited about the space that we're in, right? So I think that just all the things, like if you start to stack the things together, if you start to stack in like the distrust for centralized organizations, and I'm not saying that we're going to overthrow a government or anything like that, but just the amount of information available and just the people leaning towards, hey, trust but verify. Then you start to layering things like the availability and accessibility of some of this next gen tech that was generally reserved for blue chip companies or even tier B companies that have access to it. And then you start to layer in stuff like the ownership economy, which is, hey, I am going to try to monetize everything. I'm going to try to find this side hustle for everything that I'm doing. Because I don't trust that the company that I work for can A, pay me enough to keep up with inflation, or B, I'm going to be there for the 30 years. I think that companies are going to get smaller and they're going to look for niche workers, and that could actually benefit us being early to some of this kind of like this cultural shift in this tech. That's my kind of bull case looking out a couple of years. Yeah.
I mean, that totally makes sense. And on top of it, right, not only like structurally is that the case, but on top of it, you know, like you said, we're early, right? So we have a lot more foundational knowledge that's built up, even if it seems silly, to be able to mobilize those things, even if you haven't started a project yet in this space. So that makes sense. Laser, thoughts on that? Do you agree we're heading towards more small and medium-sized companies for a variety of reasons?
Can agree with that. My thing is, like we're all into Web3 because of decentralization and this and that, and the man has too much power. But I think it's going against human nature to think that we can just all share in this responsibility without having some sort of leadership. So I don't lean towards that super heavy. I feel like, as humans, we need someone to lead us. We need a centralized entity to allow us to do the things we do. Even in like the creator economy right now, like sure, there's an entrepreneur, there's a woman who writes a Substack and you pay for her new newsletter and whatever. But I mean, she's still collecting payment through centralized means. She's still writing her newsletter on centralized means. And I don't think much of that is going to change. So that's how I feel about that.
Shaggy, do you agree with that thought process? What it sounds like I'm hearing from Laser is like maybe a hybridized model where everyone is, like he's talking about, a lot of people are anti the man, and there's that kind of narrative that exists. Or the woman, I guess, anti the woman as well. So there's that narrative that exists, but then pragmatically, it doesn't necessarily work like that. So do you agree that we're heading towards this kind of like hybridized approach over time of maybe centralized, decentralized?
I don't know. I mean, I do think that from the employee position, I mean, look, if you've seen an explosion of, if you call it decentralization, right? Where you can go grub, be an Uber driver, or you can contract out, et cetera, et cetera. But, from the company side of things, listen, there's so much efficiency when it comes to scale and regulation, et cetera, that, having large companies are just naturally going to continue to exist. And I think you'll continue in any industry when it starts up new, have a bunch of little companies trying different things, and eventually, a couple big winners emerge. There's just too much efficiency to scale, to pricing, et cetera, that makes it extremely difficult to have some type of different model than we've seen, for basically all of industrialization.
Yeah. Yeah, that totally makes sense as well. So we've laid out the foundation. It seems like from a general perspective, we all think we're, in or approaching, maybe not in, but approaching a recession relatively soon. There are kind of these structural issues that exist. We talked about the dynamic of workers and what that situation looks like. So that's kind of the foundation that exists right now, right? That's kind of the status quo, right? The baseline that exists. So with that in mind, I'm curious to hear what you all think is the biggest near-term risk to the macro. And it could be something that we talked about, but I guess it could also be something that we're maybe missing. That could be another risk that's presenting that we're maybe is under-accounted for or people are not aware of. So is there anything that comes to mind? And, I guess we'll start with you, Shaggy. Is there any risk that comes to mind that you think is being missed currently in the macro that we need to account for better?
Well, I mean, take a step back, understand exactly what's going on. The Fed has been tightening financial conditions for over a year, raising interest rates. And they've also been, up until recently, reducing liquidity. So, you have less liquidity, more financial strain, something will break. Most likely you won't be able to see that event coming. I don't think a lot of people had SVB on their radar screen a month ago. These things happen very quickly. I do think the Fed actions make it more likely than not that this current bank issue is not the crack that brings the economy tumbling down, but something will happen, whether it comes from emerging markets or somewhere else. But you won't be able to predict it. There will be one person that after the fact people point to, look, he predicted it, but there's thousands of people out there predicting things every day. So eventually somebody gets lucky.
Yeah, that makes total sense. And then, I guess layering on top of what you're saying, right, when you combine the probabilities of all the directional things that could happen, of be it banks, be it international issues that exist, be it geopolitics, but I don't know, like all these layers that exist, right? It's a pretty likely situation, it seems like right now. Easus, thoughts? Anything that jumps out to you of risks that are out there? Do you agree with Shaggy? Have additional thoughts?
Yeah, I mean, I think outside the obvious ones, I think if I were to take another view on what Shaggy said, I think with the amount of data and tools available to like anybody with money in any institution now, and the fact that some of these financial instruments and monetary and fiscal policy that we have are first flow and outdated. I just think that the speed at which things can break and the speed at which things can be engineered to break is gonna lead to something breaking that we didn't anticipate, right? So like as I'm thinking about trying to be defensive and protect, like the thing that keeps me up at night is like, hey, where does the attack come from, right?
Okay.
We know the conditions that make it right for the attack, but I can't necessarily say, hey, this is where it's going to actually emerge from, and I think that's the biggest risk.
It's a good point that you're bringing up, and I'll ship it over to you, Laser, maybe to answer this question. It's a directional question. It's like a personal question to some extent, but like as a result of what Easus just said, and also what Shaggy just said, if one is sitting here and like doesn't know exactly where the crack is going to be, right, but knows that it's probably likely there's going to be a crack or cracks that's going to be an issue to start, and then it's going to ripple, whatever else. Like, how does one think about that to be able to protect your assets and think about it? Like, what's the best way to, in your mind, for you at least, to like mentally diversify or protect your assets in the event that you think the situation is a little bit murky right now? Like, how do you think about that?
Is that for me or is that for?
That was for Laser, if you can.
One of the first numbers therapies, and I remember saying, it's a popular saying, don't fight the Fed, and that's how I feel now. However, the way the Fed is behaving is the way that I'm going to behave with my money, and whether or not I'm investing, holding assets, holding dollars. So yeah, I guess that's how I look at it. Like they said, it's hard to know, what's going to be affected, what's going to break. Is try not to fight the Fed, and right now for me that's reduce assets and
yeah, that makes sense. Easus, what are your thoughts about this? I mean, in the case of SVB, for example, like we didn't see that coming. That's fine. Also, we knew that FDIC insurance existed for, at least for consumers, right up to $250K. So consequently, if you had more than $250K keeping it in the account, that's probably not a great idea either, right? So I don't know. What ideas do you have in mind in terms of how you protect, knowing that you don't know exactly what's going to happen and where the risk is going to come from, or risks?
Yeah, I mean, everybody except Giannis, right? I saw that meme about him having 50 bank accounts or something like that, which is hilarious. But I tend to look at, if I'm being super defensive, I tend to look at, I like to be in, and this actually burned me in 2008, but I like to be in too big to fail things, because I think that the financial system is almost the thing that holds civilization together. Like if that starts to break, then it's like, we're going into dark, into dark times. And so I think that that'll be the thing that, anything that is supported by by any kind of government is something that is a little bit safer for me. And we're seeing that right now in the banking system, right? Like you could have chose the wrong bank, but to think that they're going to let the banking and financial system go to zero in the short term, I think would have been a little bit premature. And so I tend to gravitate towards, to where there's scale, where there's safety in numbers. And that's how I've been moving. Yeah.
That totally makes sense. Shaggy, I feel like you're going to have a slightly different flavor on this answer, but I'm curious to hear what you have to say.
No, I'm right with Easus, man. Look what he said. He said, I 100% agree that too big to fail, backed by the government, right? So to me, where do you want to be? You want to be in something backed by the government when it hits the fan, right? And I mean, the ultimate kind of defensive security, if you will, is a U.S. Treasury security. So to me, still clearly, it's the most liquid security in the world. And to me, still, I know there's debate out there, but to me, nothing is more powerful or more safe than something backed by the U.S. government.
Yeah, that makes sense. It's not lost on me the irony that exists of having to have a flexible nature, which is even if you believe in Web3, right? Part of the premise being about decentralization, that at certain points, just pragmatically for yourself, you have to maybe go against that and go towards the centralized place, knowing that that's where your assets are going to get a bit more protected. So I think there's a little bit of a funny irony that exists in there. But let's put on our, look, we all are aware now, like us here, everyone listening, like we know that the economy's banged up right now. We know that's the case. Everyone's kind of expecting that. Here's recessions. We know that's the case, right? Let's maybe put on like our hopium hats for a second here. Not our delusional hopium hats, but like our semi-pragmatic hopium hats. And so if we were to believe that there's an earlier than expected upturn that we're happening, maybe like in the next 6 months, 8 months, 12 months kind of a thing within the risk markets, within let's just say like the crypto and Web3 markets. Is there a catalyst that comes to mind that would enable that are any of your minds here? I'm just curious if anything really stands out. Shaggy, and no wrong answer here. If there's literally nothing that comes to mind. Shaggy, anything come to your mind?
Super simple. A Fed that is cutting interest rates. Very simple. That when the Fed starts cutting, then go long. Like Laser said, don't fight the Fed. So play with the Fed. It works the majority of the time.
Laser, we know your answer already. Do you want to layer on top, or you want to just stand with that?
Sure.
I think we're losing Laser for a sec. Easus, let's go over to you. Do you agree with that? Do you have an additional thought in terms of something that could catalyze movement and upward motion sooner than most people are expecting?
Yeah, I agree. Shaggy, just follow restless money. I think there's a lot of restless money out there, and I think as soon as there's a sign of cutting rates, I think it's going to be like putting gasoline on a fire, and you just kind of ride that wave until time to hop off that ship.
Yeah, that makes total sense. And I think we lost Laser for a second. Laser, you back now? I think we've lost him. Okay. All good.
No.
Yeah, we can hear you now. Go ahead.
Oh, it must be. It's like delayed. No, I tried to answer earlier, but no, you're right. I have nothing else to say. So I'm interrupting to say I have nothing to say.
Well, it's simple. I like the fact that the message that we have is pretty crystallized, which makes it easy for everyone to take away. So, okay. So I'm going to shift to another question, which is kind of like a current state, let's call it time optimization management standpoint. I feel like everyone's going to have a slightly different opinion on this, but so we have the current macro context, confident that there's an impending recession and we're not in a great place right now. Possible pathways, like we said, if we see rate cuts, that to kind of jump in at that point, although that doesn't seem like the most likely outcome, right? So it seems like what everyone's saying is 12, 18 months, maybe a bit more in that direction as we start to lean in and recover, right? Fine. So at the current state, people are sitting here listening right now, and everyone has options of how to spend their time in this kind of a market, right? And I think the options are some combination of builder, investor, trader, maybe even work outside of Web3 as well. Even if you're still part of Web3, work outside of Web3. On average, what do you think is the best way to spend your time economically, given the current macro? If, like many of us, you think there will be a bull that's happening again, right? So if you do believe in Web3, how do you think about using your time in a time like this? And I know this is a very personal take, and there's lots of different variables that would factor into it. But I don't know. I'll start with you, Laser. How do you think about that?
Can you hear me? First of all,
Yep, we got you.
First of all, I would just say make sure you're comfortable financially. You have money saved up, or you have a job with income coming in. And then other than that, I don't really think there's a wrong answer. I think as long as you're learning you're doing something. Whether if you're building, and say Web3 fails or whatever you build fails, you will still have that experience of building something, and that will get you another job, or it'll open up another door down the line. Same thing with investing. If you lose all your money investing in something, you'll learn a lesson for when you have more money to invest in something else. Same thing with trading. So I just think, make sure you are being smart with your money. You're comfortable, you have some money saved up, and then you're just doing all you can to learn and put yourself out there, and take a little bit of risk, but just be smart and keep going.
I come back to some of the comments that were made earlier also, right? Which is, in the adoption curve, I think you said this earlier, Shaggy, right? Like in the adoption curve, like we're still really early, right? And so just by virtue of picking up knowledge and continuing to test things as we do within MVHQ and being really attached to what's happening in this space, you're going to be, that information is going to compound, right? That knowledge is going to compound and put you way, way ahead of anybody else who enters the space. So I can totally see the balance that you're saying. Easus, you're a hustler. I feel like you definitely would agree with what Laser said. I'm sure you have some different thoughts and angles there. What are your thoughts about this?
Yeah, I agree 100%. Like you got to know your your financial situation, and you got to try to, you just got to try to stay in the game as much as possible so that you can take as much advantage of the next thing as possible. The next kind of window as possible. The twist I would say is, what I've done over the last couple of years, and I talked to you about this Aslo on the side as well. Like I left my corporate job in 2019, right? And I did a whole bunch of stuff in the middle, some consulting and, kind of a side business. And so what I've kind of spent some time doing was how do I draw a string from where I was to where I am, and like kind of document the things I've learned and kind of repackage my personal brand so that I could take advantage of any opportunities that may arise in the next couple of months or whatever as I ride this bear out, right? So assuming that the environment is choppy, there's risk in every corner, how can I position myself for what the next phase will be when we come out of this, through upping my skills? And right now that's learning prompting, that's learning Python, relearning Python, that's those kinds of things, to position myself for the next opportunity.
That's also the bullet point of being a numbers therapy roundtable expert, I assume, as well. That's also going on the resume.
100%. These are going on my site.
Fair enough. Shaggy, what are your thoughts? I know you typically have your day job that you have. You do this as you said, as a hobby, but it turned into more of a hobby. What's your opinion on this? I'm curious.
Yeah, I mean, of course, I agree completely with the Laser and Easus. I mean, you have to be, financially secure first off. So make sure you have the cushion. I think this would be an extremely difficult space if you were simply just trying to trade for your livelihood, right? It's a little bit different if you're working, for a project or something like that, where maybe you are getting a paycheck or some income. So that's number one. And everybody's going to have their own mix, what they're comfortable with and what their life situation is, right? Somebody that's has a family, has to put kids through school, etc. They're going to have a little bit different cash flow needs and safety net than kind of someone who's in college or getting out of college and single and has a very low cost of living. So, there's no one right answer for sure. I mean, within the NFT space itself, I think one thing I've learned, because again, I was pretty heavy just in NFTs for, at least the first year and a half. Lately, I've been spending very little time on kind of your traditional NFTs. It's just the time spent, income or, profit generated is extremely low for me anyway. Spending much more time, trying to, learn and profit in some different spaces and having more success currently in things such as whether it be farming airdrops, which obviously doesn't cost anything, it just costs time. or looking at more on the coin side, especially things on some of the new chains, some of the new protocols coming out. Maybe there's not as much competition. I've been having some success there. And then, most recently, again, just did it because I thought it would be fun, but turned pretty profitable as well. And there's a group of us, a pretty active group at MVHQ that does the DraftKings Rainmakers, which, again, it's an NFT thing, but it's really kind of another spin on it. So just trying to broaden my horizons and do some different things where, again, my time spent yields more profit than in the traditional NFT space.
I just want to, that's great context from all of you guys. And I just want to maybe do a little bit of a shout out now as we're talking about it, because I feel like MVHQ, for those who are listening who are less familiar, yes, Web3, right? Web3 is the focus of it. NFTs, of course, we know that's the case. But at least for me personally, like the thread that I happen to see within the community, yes, like it happens to be focused on Web3 and NFTs predominantly, but it's not quite just that, right? It's also like a bunch of very savvy, nimble, hustling people who are very good at playing different games and figuring out what the right game is to be able to play and open new businesses or new opportunities and things like that. So I think that's a group. That's why the group is so tight, even through a market like this. And I just think it's really, really impressive to watch because everyone comes from so many different backgrounds, different ages, different everything. So it's just really, really impressive to watch. Kind of what you were just talking about, Shaggy and Easus, I know you know really well, and you too, Laser. So just a really, really impressive thing. So, okay. So with those answers in mind, totally makes sense. We know what the time horizons are. The Fed, we move into the future and Fed starts cutting rates and you start to see the signals of what you're talking about, right? The market's starting to open up. You're going to start to put money in at that point. Let's call it 12 months out, 18 months out, maybe 24. Just projecting forward, do you have a sense of where your heads are at? Any of your heads are at in terms of NFTs and what your thought process is going to be in investing? Do you have a thesis around blue chips and the longevity of blue chips and the overweighting of that? Do you have a thesis on certain utility of projects? Like, again, we're projecting out here into the future a little bit, but what's on your minds in terms of where you think you're going to spend more attention personally based on where you think things are going to go? I'm going to start with you first, Easus, and see what your thoughts are. Do you have a thesis for as the market turns in the future, like where you think you're going to be spending more time and energy in NFT land?
Yeah, that's a tough one. That's a tough one. So, I think somebody had asked me. I just messaged them now. They'd asked me about what I thought about blue chips. It's really hard. It's really hard for me to, outside of Yuga, just because of the size. It's really hard for me to kind of put anything in like a blue chip. Blue chip to me is in that almost too big to fail category. I think really is really only Yuga there. And if I start looking at if this is a prolonged bear, and I start looking at kind of what I'm seeing from in the liquidity situation with loans and stuff like that, I don't know what the floor for those would be. But because of the historical nature of it, because of the community there, if I were to focus on blue chips, trying to accumulate those assets would be what I would look at. I'm not really a blue chip guy. I'm a multiples guy. So I like to take riskier bets in any kind of uptrend. And so what I would be looking for is I'd be looking to play whatever the narrative is that would emerge at the time when that happened, right? So if that narrative is utility, if that narrative is loyalty points, whatever that narrative is where I think the new money is going to come in, the kind of new irrational money or promiscuous money will come in, and that's the kind of money I'll follow for multiples. And then I would try to, maybe accumulate that and turn that into a blue chip, but I don't know if I would be storing money in a blue chip at this point. Yeah.
Shout out to Fiasco. I don't know if Fiasco's listening live. I think that was your aforementioned question that you were talking about. Funny that you should say that too. I had a reasonably similar response to what you said about it being more of the downside protection and longevity than anything else. So I totally agree with you there. Let's flip it over to you, Laser. If your audio is working again, projecting into the future, what did you learn, and directionally, like where do you think you're going to spend your time and attention and investment dollars within the NFT space moving forward? Does anything stand out to you?
Can you hear me?
Yep.
So yeah, I guess I kind of see it. I try to make comparisons and look at the past for how I can try to predict the future. See blue chips, quote unquote. I mean, first of all, I agree with Easus where I would only really consider Yuga assets an NFT blue chip. Kind of liken it to Bitcoin and everything else. Like Bitcoin had its first huge run up and made many multiples, made many people rich. But since then, every cycle there's a new narrative and there's new coins doing many more multiples than Bitcoin is. And so just writing off what Easus said, I would try to play the narrative and see where that irrational money is going. But to be honest, it's really hard for me to see any kind of really sniffs the bull run that we just had in NFTs the past couple of years. I definitely would not be the first one to jump in, and maybe that means that I miss out on profits or whatever. But I mean, I would definitely need some confirmation that people have a risk appetite for NFTs as PFPs or the kind of early stage technology way that we've been using them. Because like I said, I think NFTs, the technology is great, but I think once they're really used, there won't be so much speculation on it. It'll be this is what I use. I get utility from this. And, maybe like it's kind of like opening a pack of Pokemon cards or a pack of football cards. Maybe you get that $1 million card down the line. But I mean, for the most of it, you just have fun collecting and things like that. So, yeah, I don't know. We'll see. I'm definitely playing it by ear. But yeah, that's how I would think about that.
Yeah, that's an interesting call out that you make. And I'll be the first to admit that compared to you, Laser, I'm definitely earlier in the adoption curve, so I don't need to have full confirmation to go. I need maybe partial confirmation to go. I also think you bring up an interesting point, though, which is I think the kind of irrational market that may exist, maybe a little bit also like segment focused or industry focused within NFTs as an example, right? So by way of example, like art in the Web2 world, right? People pay ridiculous prices for that, right? It doesn't have strict utility attached to it. You don't get, perks attached to it. You don't get tickets attached to it. Things that are like the dollar denominated, let's say, right? So I wonder if it's maybe going to be a little bit more category specific, where certain assets that have maybe some perks, but that's not the core of what they are. They also offer flex appeal and a variety of things, right? Do have a little bit more of that irrational behavior that could exist, assuming it's a behavior that stays, which I think it will, versus maybe some other things that are a little bit more on the rational side of things. Shaggy, what are your thoughts? You've dipped into a lot of different things. You've dipped into everything from the more emotional assets that exist all the way over to Budverse cans. So what are your thoughts about this?
Yeah, Budverse cans were great. It was kind of a crazy time. I wouldn't buy one now, but at the time, man, they were very profitable. But yeah, I mean, that's exactly I don't really consider anything in the NFT space a blue chip. I mean, I would consider Yuga within the NFT space a blue chip, but you take a step back and look at all the various asset classes out there, various companies, et cetera, you could own. I think it'd be pretty hard pressed to call anything in the NFT space a blue chip. In that extent, and also I don't necessarily want to own a blue chip in the NFT space because I think as Easus said, to me it's about multiple, right? So if I have to buy something at 50, 60 ETH, I mean, what are the chances it's going to go to 200 ETH, right? 4x. Where if I buy something at 0.1, it goes to 0.5 pretty easily, right? So again, I just don't play in that space. Doesn't make a ton of sense to me. Just because of what I'm using the space for, which again is looking for very risky type of plays. I think when the next bull run comes, I think I'll be much more aggressive. I mean, I did very, very well in the last bull run, but I think when you're in a risk on period in a very kind of high beta risk type spaces NFTs are, you're rewarded for taking risks. So I think that is one thing I will do in the next bull run. The one thing I do kind of buy and vault are kind of art, one of ones or gen art, but I don't really expect to make any money on it. I just do it because I like it. Just a lot of times I put some excess profits there, put it away. Again, I just do that more as a hobby, enjoy it. Maybe some of those will be worth something one day, maybe they won't. But that's, I look at, I just do that kind of for the enjoyment, for kind of art collecting, if you will, because I do think, that art space is very different than, especially the one-of-one space is very different than kind of a lot of the other NFT space. Doesn't mean it doesn't hit the same cycles. It's extremely illiquid. I wouldn't tell anyone, hey, go out and do this to make money. It's just, again, there's lots of different markets out there. And so that's, like I said, I diversify. That's one way I diversify as well.
Yeah, that makes sense. Totally, not liquid assets even within Web 2 land and previously, right? Although, of course, there's the interesting element of it, which is fractionalization, right? Which could make it a little bit more liquid over time, possibly. But yeah, totally agreed.
Hey, Aslo, can I just jump in? I think it's interesting. I think you kind of, when you open the segment, I think we're expecting a little bit more being on different sides of things. I think a lot of our thoughts have aligned. I would say that there were some nuances in the answers that we just heard, right? That I don't want the people that are listening to miss, right? Like I love that Laser said that, hey, Bitcoin, Yuga's kind of like Bitcoin. And again, one of the biggest things when you're looking to enter into any of these things is kind of like, what are you entering it for? Like, are you entering it for multiples? Are you entering it because you want the social status? Are you looking to build a brand? Like, all those things would kind of influence what you buy, how you buy, and what price you'll be willing to pay for it, depending on what utility you want to get for it. And same thing with Shaggy, right? He's saying, hey, I can have an eye for art, or I have an interest in art. I enjoy doing it, and so I will buy those in this market and vault them, right? And that doesn't mean, oh, I'm only buying NFTs for the art. Like, he's still here for the multiples. It's just that there is a certain amount of his stack that he's setting aside to vault and buy just for the art. And I think that there's not a one size fit all answer. I think that, but the biggest thing that I could say is you got to kind of identify what it is what your goal is, and not just react to the hype. Because when we saw it with Reddit, I saw it in sneakers, man. When the Yeezys started popping off in 2016, it was like, these are never going to go down. They were selling for $1,500, $2,000 a pair. And then over time, that market becomes saturated and that market kind of evolves. But there's always going to be something that people want and they're irrational about. I stopped trying to predict what it is, but I always want to be ready for whenever that irrational money comes. But that doesn't mean that I have to necessarily go all in on that thing. I just wanted to, draw some.
No, it's excellent context. That's really, really excellent context to call out. And I do agree with what you're saying, too. There were definitely different flavors in what we just said. And Shaggy's was a good example. And Laser's flavor and take on it was a good example, as was yours. So that totally makes sense. We do have a question from the crowd and we'll start with you, Shaggy. And I know, Laser, you're definitely going to have an opinion on this as well. And I'm sure you will too, Easus. But question from Scottco is thoughts on the global decline of reliance on the U.S. dollar and what that means potentially for the U.S. economy. So, we're going a little bit big again from where we started. I probably should have led that a little bit earlier. But any thoughts in terms of the U.S. dollar and dollar dominance and reliance and how that sits and how that could affect things?
So this has been a narrative that's been around for 15, 20 years. It was a huge narrative in 2009, 2010, post-financial crisis, when the Fed was literally doing trillions of dollars in quantitative easing or bond buying, pushing liquidity into the system. And my reality, and I think the reality is, obviously you always are going to have these narratives or, these different themes that would seem to challenge the dollar dominance. But, I just don't see it. There's no realistic competitor. I mean, nobody that really wants to have their assets dominated in yuan, where you have a communist government kind of controlling the economy. There's not enough liquidity in any other major currency in the world. You got the euro, which of course is it's just not saying it's not a bad currency. It's just it's backed by numerous governments with different agendas, and the U.S. has the largest, most diverse economy in the world. It has the strongest military in the world. It's these narratives have been out there for a long time. And look at a long-term chart. The dollar is not in some type of massive decline. There's no logical competitor. Yes, the U.S. has its challenges, but quite frankly, so does the rest of the world. Debt is not unique to the U.S. Most countries are running with huge debt loads. So, I would challenge the narrative. It makes for a nice story, but I just don't think it makes for reality.
Laser, any thoughts to layer on top of that? Do you agree with this premise?
Yeah, I agree 100%. I think Shaggy is really well versed in this stuff, and I got nothing to add.
Easus, I'll maybe slightly adjust the question to you, which is, directionally what we just said, but then also, is there any kind of shift that's happening in terms of the fulcrum or the leverage that exists within business markets, right? Because I know you spend your time also hustling and juggling multiple things. Do you think there's any kind of leverage that's going to start to come out in the business markets as you deal with, I'm just making up an example, China for certain products or for certain imports, or X place in terms of services, because services are more spread around the world at this point and decentralized? How do you think that's going to evolve over time? Do you think there's going to be an evolution there?
Yeah, I think I won't talk about in terms of the dollar. I think just in terms of dominance, you definitely have a new dominant player that's trying to establish himself, right? And that's gonna bring opportunities for some, and it's gonna bring also some uncomfortable times for others, right? So that doesn't mean I feel that the dollar's gonna get flipped, or there's some near term deep whatever for the dollar. But I do think that it's gonna open up some, if you can kind of navigate the environment in the other parts of the world. I think you're gonna be able to take advantage of a broader market and see some more opportunities than if you're just kind of dollar denominated, right? But I kind of agree. To go back to what Shaggy said, I kind of agree with Shaggy just because I have to. Like I went to Hong Kong for 2 weeks, and what became really clear to me when I was there was that as much as it was the same, it was like just the philosophy and everything was different from a business perspective. Like we had to learn we were studying like a new way to do business. And so because I don't have an advantage there, I tend to play where I have a little bit of a, even playing field. But for people that can transverse both, I think that this is going to open up a lot of opportunities. As things balance out a little bit more, and I think the dominance in the U.S. kind of, as the superpower on that side of the world grows. Yeah. Does that answer your question?
Yeah, totally answers the question. I mean, I think it's a big question. It's like, there's the dollar question, which in and of itself is a ginormous question, and this is another complex layer to it, right? So, and by the way, everything's moving really fast in the background as well, technologically and skill-wise and everything. So, not a simple question, but I think it's useful, like really, really useful for certainly myself, everyone listening, to frame like how we spend our time and being open geographically, like you're saying, and all those things. So super, super useful. So I'm cognizant of time. This was just like a phenomenal episode that, if nothing else, like not only was useful, but I really enjoyed too. I obviously love speaking with all three of you whenever possible, but getting all three of you together to have us riff, absolutely phenomenal. So really appreciate all three of you coming on. To our audience who's listening live, listening later on as well, really appreciate you too, and all your constant feedback and thoughts. We'll definitely continue to do this. So as I said, this is 1 of 7. We'll continue to carry it forward. We'll try to make sure that each time we do it, that's really, really relevant to what's going on in the markets at that time, since things always continue to move, as we know. So we'll do that in the future, and we'll see everyone similar time next week as well. So thanks so much, everyone. And we'll see you down in VC1.
Thank you, guys.